Record. Good afternoon, traders. Welcome to the 1 week free webinar we are doing, educational webinar. We have learned some things. I hope you've learned something so far. And today we're going to do one of the most important things you need to do. And that is you need to understand how to manage your money and how to manage risk if you're going to trade. So I'm going to tell you something now that may shock you, but this is the most important thing. If you have good money management and you have good risk management and you're the worst trader in the world, it's going to take you about a year to lose your account. Remember that. If you have good money management and you have good risk management and you are the worst trader in the world, it will take you about a year to lose your account. You are not going to lose your account so easily. Even if you're guessing what you're doing, you're going to win some, you're going to lose some. And with good money management, you may never even lose your account. The reason traders lose their account is simple. They break money management and risk management. And that means your account is going to disappear. If you're risking all your money on one trade, you're going to lose it on one trade. If you're risking it on 5 trades, you're going to lose it on 5 trades. If you're risking it on 10 trades, you're going to lose it on 10 trades. So that means if you're risking 10% of your account on a trade, in 10 trades, you can literally have no money to trade. You will have a few cents in the account because it's 10% of what is remaining. So you may still have a sum, but that is not enough for you to trade. Right? So what is really risk management and what is really money management? So let's start with money management first. Money management is how much money you have and how much of that money you're willing to lose. I know there's a simple terminology out there saying, people are saying, well, you should not trade more than 1% or 2% on your account. That's pretty basic, and it doesn't tell you the whole story. If you're willing to lose your whole account, 1 or 2% is okay. You can go ahead and trade like that. And people say, well, when I trade like that, I don't really make a lot of money as well. So here's what you really need to know. You need to know what is your risk appetite. How much money can you actually lose before you start panicking? How much money you're willing to lose before you stop trading? Before you realize that what you're doing is not working for you? That is a question you need to answer. And when you answer that question, that is when you can actually go and create a money management strategy. So let's go. Let's say you have a 10K account, and we're going to go with numbers that are, wrong, so it's easy. Let's say you have a 10K account. That's $10,000, and that's your account. Now, few of you would say, well, I could risk my whole account. If I lose this 10,000, I really don't care. Right? If you can say that, well, then you can actually trade anyhow you want, because if you lose the account, you really don't care. But if you're saying that I could only afford to lose 3,000 of that money and I will start to panic, I'm going to get very emotional. I'll start to fight the market. I'll start to do all the things I shouldn't have done. I'm going to forget about strategy. I would want to make my money back, right? If all those thoughts are going to come to you, you're going to get very emotional. Then that is what you have to make a decision, that after 3,000, I stop trading. I go back to learning because what I was doing is not working. And as long as you make that decision for yourself, that this is the amount I can afford to lose and I would be okay with it. It's like going to the restaurant. How much are you prepared to spend when you go there? You're going in the restaurant to have a nice time, right? You're not going there to panic and to make noise. So whatever money you have decided in advance you can afford to spend there, you're going to spend, and you would not worry about it. You'll be a pretty happy person leaving the restaurant, right? Because you know that that money is gone and you're happy about it. You don't care that you're willing to accept that money going away from your pocket. It's the same thing in trading. You have to decide how much I need to say I'm losing, and then I decide, okay, that's it. Enough is enough. I'll stop. And if you decide that is 3K, I would make an assumption that you're overrating yourself. So I would divide that by 2 and give you 1.5 or 2,000. I would reduce that sum because I would believe you're overrating yourself to believe how much you can handle. So let's say we made that 1.5 or even 2K. If we make that 2,000, that is the amount you're willing now to lose. And once you lose that amount, you stop trading. So what is the next stage when you know that? What do you do with that sum? You need, remember, before you start trading, you need some kind of a strategy. I don't care what that strategy is. We're not discussing strategy now. You need some kind of a strategy. I'll flip a coin and buy, or I'll be trading support and resistance, or I'll trade pattern, or I'll trade something. You need some kind of a strategy. When you find that strategy, you will have to go and test it. I would never advise anyone to trade without testing the strategy. And as you're testing the strategy, what you're going to find in the strategy, you will win. Now let's use green for win, red for loss, right? You will win, you will lose. You will win, you will lose. And then you will lose, and then you're gonna go win some more. You're gonna win some more, and then you find you get another losing streak again. You get some more win, you get some more loss, right? And then you get some more win again. And then you do this for like a number of period, 100 trades or 200 trades. And what you're going to find is that you will have to pay attention to your losing ones, right? You'll have to pay attention to these. What is the longest streak of losing you're getting? How much is it? And for the simple purpose of making things simple, we are going to say 10. Let's say 10 trades is the highest number of losing trades you're getting on any one time based on that strategy. That means 10 trade should not make you lose more than $2,000, because at any point you can lose that 10 trade before you win again. So that 10 trade should not make you lose more than $2,000. So you lose that 10 trade, then you get a winning trade again, but you should not lose more than 2,000. So now you have to divide that 2,000 by 10, and you get $200. $200 is what you can maximum risk on any trade. Because when you lose 10, that's it, 2,000 is gone, right? So now you remember your max was 3,000. We reduced it just for your sake, right? We reduced it to give you that extra. You still have 1,000 more before you start to panic, right? But you lose 2,000 and then you start winning again. So you make back more, and if another losing streak comes, you're pretty good with it. You don't have to worry about it, right? And that is what is called money management. Managing your money the right way. Not 1%, 2%, 3%, but this. This could be any amount of percent in your account. I don't care. That is what you need to do to protect yourself from getting emotional when you're trading. Because now you're pretty cool. You lose $200, you're not worried. You're willing to lose that. Remember, you made that decision that you can lose 3,000, right? And you lost only 2,000. So you're still pretty comfortable, right? You're not, oh, I stopped trading and panic and all of that. And then you continue to trade. You win again, it grows again, and eventually if you're winning, if your strategy is good, you're going to win more than you're going to lose. Your win-loss ratio is going to be higher, and then you will make more money. That's all you need to know about money management. That is how you should manage your money to make you feel comfortable when you're trading. It's not only about 1%, 2%, 3%. If you decide I can lose all of this, well, then divide that by 10. And guess what? You may likely lose it in 10 trades, and when you lose it, it's gone, right? So I would never do that, right? I would always half it. I would half it, put it by 5. If I can lose all, I'll still go by 5 and divide the 10 trades by 5. And hopefully you do have a strategy that you tested. Here is where the problem comes. Very few new traders have a strategy they've tested. So they don't know this number. They don't know these numbers. They don't know these numbers. So eventually they don't know this number. And they've set themselves up for failure in the future because they don't know what is the risk, right? How much they're risking, what they're risking. They have no idea how to manage their money. They click a trade because they have a very strong feeling it's going to go. They put no stop on it, and then it's gone. So this is money management. What is risk management? Risk management is simple. What is your risk in every trade? And please, if you ever write me, don't tell me I'm in this trade, but I don't have a stop, because at that point, I don't know how to help you. I have no idea how to help you. People write me and say, I'm in this trade. Do you think it's going to go back or it's going to go down back? I'm upside down. Or that. And I said, the first thing I ask them, okay, where is your stop? And they don't have a stop. And I said, well, you need to put one right now. You need to manage your risk right now. Because if you're not managing your risk, you're risking everything you have. Everything you have, you're going to lose if you don't manage your risk. And to manage risk, you need to know, first, you would have your strategy, you would test it, you know what it's doing. And based on the strategy you're using, you would know that if I'm selling here, if I'm selling a breakout trade here, where would I exit that trade? What's the risk of that trade? Where should I exit if this trade is not going? And that is where you put the stop. So let's make an assumption. You said, oh, if it breaks the stop, that's it. It's no longer valid. That is where your stop would be when you were testing the trades to see how much win, how much lose, right? So if it breaks that top, you need to take it off. And this is what will become your risk. That is what you're going to risk it. That should never be, based on our previous money management, that should never be more than $200. And that you can calculate the pip size, and then you will know what lot size to put on. And that is just the risk. So what is risk management? Risk management is saying that if you take a trade that's go 1-to-1, let's do it. If you take a trade that go 1-to-1, and you win one, you lose one, you win one, you lose one, you'll be even. But what if you ignore this trade and take trades only that go 2-to-1 and more? That is managing risk now. One risk, two reward. So every time you win one, you lose one. You win one, you lose one. You end up growing your account. Your account end up going up rather than down, right? Because now, every time you lose one, you lose whatever $200. Every time you win $400. This is managing risk. You should take trades with good risk to reward. The reward has to be much more than you're risking on every trade. If they're not, you cancel it. I see traders take trade where they put the stop like this, and then they put the target here, right? You know why they do that? They want to be winners. They want to be winners. They don't want to be losers. They want to be winners. They want to win. They want to prove that they can win. And they know that the probability of it coming this much is high. So they can always say, oh, I made a winning trade. You made a winning trade, you're going to lose your account. Because your risk management is poor. You have very poor risk management. You only do that to say you can win. Yeah, you won the trade, but you lost the entire account eventually, because every time you lose a trade, you're going to lose more than you win. And in the long run, the losers are going to catch up with the winners, and then you're going to be out of the business. For you to set the target, you need to understand, and that is what is called forecasting. We will do that tomorrow. You must know where that trade is going to go before you can set a target. And people who tell you you don't need to know that have no idea what they're saying. There are people who are doing that. Another thing I notice traders do is they put one risk on here, and then they said, I will take part of my, let's use green. I'll take part of my profit out here. I'll take another part of my profit out here, and I'll take another part of my profit here. This is very poor risk management. Very, very poor risk management. The reason traders do this again is because they want to be winners. They want to prove that in that trade they made some money. They won the trade. They risk 20 pips here. They risk 40 pips here. They make 20 pips here, and they make 30 pips here, and they add it up and they say, I made 50 pips. No, you lost money. You will lose money in the long term, because remember, they're not reducing their risk. They're reducing their profit. And that is the worst thing that you can ever do, right? You're in a very good trade. You're confident of the trade. Your strategy said the trade is going to go. And what you do is reduce the amount of money you're supposed to make. That is not a good risk management thing. The good risk management is reducing your risk, not your money. What I would advise to do in that case is when your trade comes to this level, move it to break even. If it comes back and take you out, so be it. The trade is wrong. It did not go to your target. And you will have to accept that and live with it. That's it. If it is going to go to your target, you want all that money. You don't want three little parts of it. You want the entire sum, because you've calculated your risk to reward that way. When you take the trade, you've calculated, that's my target. This is my stop. This is my entry point. That's my risk to reward. I'm not going to take out a little piece out of it just to prove that I have I'm a winner. That's amateur, and they're only, you know who does that a lot? Signal service people. So that they can prove to you that they've made pips. And you know what they do? They calculate, add up these three different winning pips. Oh, I made 20 pips here, and I made 10, 15 pips here, and I made 15 here, 30 here, and 40 here, and they add it up, and it's, oh, we made a whole lot of pips in that trade. Well, guess what? You make very little money in that trade, and I am here to make money, not to make pips. You're a trader because you want to make money, not pips. Pips are for signal service people. They make their money from your monthly contribution to them. And I've repeated this many times, and I'll repeat again. If you're a subscriber to a signal service, you should stop it, because you're going to lose your account eventually, and you will never be a successful trader. You will never learn to trade. You will be dependent on them forever, and you will never be successful. I've never seen any single trader comes out and said, I'm a super trader because I bought signals. How did I come to $200 per trade? You just joined the webinar? Watch the recording, you'll see it. Right? So that's it. You should never do that. Learn to trade. That's the main thing. You learn to become an independent trader of your own. And then you will understand that these hypes that they're getting, dividing it by 3 and dividing it by 4, and my first target, my second target, my third target, is just reducing your profit. If you know it's going to go to the third target, then why the hell you cut it short at the first and the second? If you don't have confidence in the trade, then why the hell you take the trade? Right? Just don't take the trade if you don't have confidence it's going to go. If you don't know the trade, if you haven't done enough studies in it, if you haven't done the work, you don't know how these patterns behave, you don't know where that pin bar is going to put it to go, then don't take it. How do you know? You don't have to guess. You have to go and study the market. People keep repeating, we never know what the market is going to do. That's BS. You go and you study at the back what the market has done previously. And you make that assumptions that if the market does this every time, it's going to probably do this every time. You don't go cross the road and you don't say, well, I don't know which light I should cross on. You know which one to cross on. You don't just run across because a light lights up, right? It's the same thing. The market has structured. It has a pattern. You study those patterns. You know how far they go. You know how they behave. Now, they're not going to go there every time the same way, but you have an idea. You have an average. You know where your stop should be. You know where your target should be. You know how much it's going to go. What if it missed your target by 10 pips and you were looking for 150 pips? Well, no big deal. You may get 130. You move your stops and you take 130. And that is okay. But at least you know where you're trying to target, and you know why you're targeting that place. If you don't know that, then it's a waste of time. When you go to buy a car, you at least know the price. You have an average price of the car you're going to buy. You don't just walk in the shop and say, well, I don't know how much it's going to cost. I'll just look around. No, you've done your studies. You've studied the entire internet. You know all the shops. You know what is the price for this car. You know the specific car you want. You know which dealer has it is the cheapest price. And then you go to that dealer and you still negotiate because you have an idea based on what you're negotiating. So you may get a little reduction more. You may not get it, but you have an idea of the price before you negotiate it. That's the whole point, right? You have to have an idea where it's going to go and why it's going to go there. And based on that, you can say, okay, so the structure, is it because the pin bar reverses so much? Is it because of support and resistance? There's an X support there. Whatever is your reason. You must have it, because if you don't have that, then it's a waste of time. And if you have that, then why are you dividing it by 3? That's so simple. It's because you don't have the confidence in it, or it's because you're trying to say you make some pips. There is nothing like adding to a trade. Every trade individually is a trade of its own. When you buy a car and you go buy a next car, you don't add to the previous car. You just bought the next car. You have 2 cars. Right? When you put the trade on, each trade has its own risk. Each trade has its own target. Each trade has its own stop. Each trade has everything individually. You just took another trade. You didn't add to the previous trade. That is what I'm saying. You don't literally cut short your trade. That's scaling out of it. Scaling in its trade is putting on another trade. It's an individual trade. It has its own risk. Let me give you an example concrete on this, what I'm doing now. Let's go to the punk chief that we are in. Right? So we took this trade this morning. We have a specific reason why we took that trade at that place. This trade has a stop. If it breaks that top, that's it. We're out of the trade, because the trade we took is based on the fact that once they break that top, when this trade comes to this level, that is this trend line where we're looking at the patterns that we're looking at, this pattern could go back up. We know that now. So for us, there are two things we're looking at. This could go down or it could go up when it comes here. So we start to manage our risk, and we already managed the money by putting it with whatever risk to reward we wanted it to go here. So when it comes to this level, we will do two things. We will move that stop and move the trade out of risk. So that trade, this trade is no longer in risk. If it goes back up, great. We got a break-even trade, or we got 10 pips out of it. Forget about that. That's not what we're targeting, right? That could go. If it breaks here and it make a flag here and then continue to go down, we can sell here again and put a stop here again. But this is not adding to the previous trade. This is its own trade. This trade has its own risk. It has its own reward. This trade is going to have its own risk, and it's going to have its own reward. It's just another trade. That's it. Each trade will be managed individually. Because what I mean by that, simple. If this trade comes to this level and start to make a consolidation, and I have a feeling that this consolidation is going to come too deep, I may make a decision to close this trade for profit and keep this trade to roll. Because each one of them is individual. You're still risking money every time you put on a trade. So I may make a decision to close the short-term trade. I may even make a decision to buy to the upside, which would be a buy trade. And although I have a sell here, this sell may be a long-term trade now. I may want to keep that for the longer run, and I may take a short-term buy here in the correction. And when I take the profit out of that, I'm looking for a sell to continue again to the downside. One does not affect the other. They're both based on their own risk to reward, they're based on everything. They're based on their own calculation. So it's a separate trade. You just made a second trade. That's it. And there must be enough reason to make that second trade. There's no need for it. You can do that. You can open another account. You can open 3 accounts for it. It doesn't matter. You can do all on the same account. It doesn't affect. Remember, you still have to manage your money in the account. So if you open 2 accounts, you will have 2 different money management in those accounts, right? It really does make a difference. You can do it for safety purpose. I know traders who open different accounts with different brokers for the sake of safety purpose. One broker go bankrupt, at least you have another account to the other broker to trade with. And I've seen broker go bankrupt, so I know that makes sense to do. Take 2 accounts on 2 different brokers. So one go bankrupt, you're still with another one, right? While you're waiting to see whether you can get any money back from that broker. So you can do that for that sense. It doesn't make a difference. Basically, this is what you need to know about money management and risk management. Now, you can do it whatever way you want, but I'm telling you what will really be the right way to make you money, right? Because if you start cutting short your profit, you're going to end up with less profit than you should have had. I would willingly take the break-even trade rather than take out a little piece here and a little piece there and a little piece there, because at the end of the day, how do you calculate your risk to reward if you're taking out pieces and pieces, bits and pieces out of it? You're actually messing with your own risk to reward, right? You're actually messing with the trade, basically. That's it. You shouldn't do it, right? Unless you want to prove that you can make a few pips on every trade, right? So all your trades you're going to calculate as being winner because you make a few pips in them. At the bigger end of the day, you will end up losing more than winning. Because your risk is not reducing, but your reward is reducing. So think about it. Work around that and see what is good for you. Right? So that's what we need to do with risk management and money management. What do we need to know about moving averages and ATRs, average true range? So some people like to use moving averages to show them when the trend is going to, let's use 2 different colors so we can get it. So when the market starts to trend up, right? and they're looking for it to turn, they're going to put moving averages. They can, I don't know, pink, let's say you're moving, you get a moving averages going like this, one, and they're going to put two different time frame moving averages, another one going up more tighter following the trend like this, and then they're thinking, okay, when these two cross over, are we in a downtrend? I think all of you have tested that, right? It doesn't work. You know why it doesn't work? Because you're using an average in between. An average means if this is a 10-day one, you're calculating for 10 days. If this is a 50 period one, you're calculating for 50 periods, either 50 days or 50 hours or 50, whatever it is, right? If this is a 10 period one, it means you're at 1 hour, that's 10 hours. If you're at 4 hours, 10, 4 hours. If you're at the day, it's 10 days, right? It's calculating the periods. And here is where that will go wrong. Let me show you. Remember how the market moves? Everybody remember the basic concept of how market moves? Let me go through back that basic concept for you guys. I'll start with the daily so you'll have an idea. The basic concept of how market move is it makes a sharp impulse, it makes a consolidation, a sharp impulse, a consolidation, and then it could go again. If you're calculating 10 days of this, if your last 10 days in here, you're calculating as a 10 days period to see what the moving average is going to tell you. Let's say it's 10 pips there. You will make an assumption that before this moving average started to turn on, you need 10 days of volatility. 10 days of volatility to change the direction, and the impulse is over. The impulse is over. You're going back into consolidation. You get 1 day of volatility and your impulse is over. See? The moving average will be lagging very, very, very seriously. 1 day and the impulse is gone. That's it. You miss the trade. Your moving average is going to cross over, and then you go in. Your moving averages get a crossover because of that, and then you decide you're going to sell and you're stuck in here, or you take a loss. The same with ATRs. If you're using ATRs, people say, I like to check what's the average, what's the average true range of the day. Well, what would be the average true range of these days compared to the average true range of these days? For you to see that that range is increasing, it will take you 10 days, 10 days. If you're looking at a 10 period moving. If it's 7, then 7 days. That thing went in 1, 2, 3, 4 days. So by the time you calculate that 4 with a 4 that was in here, right? To see that the average true range is increased, sorry, you're back into consolidation. And the reason it's really going to mislead you is because the consolidation is always much more bigger than the impulse. So if you're using an average true range to tell you how much is going to move today, you need to know what that true range is. Is it a consolidation, or is it in the impulse? Because it's an average of if you're taking the whole average, let's say you happen to fall into an average like this that is 10 days moving down, and you see 110 pips, and you say, oh, I'm going to sell, it's going to go 110 pips tomorrow. Well, you may be unlucky because tomorrow it's going to go into consolidation and stay there for the next 10 days. Nope, that doesn't work. Somebody said, how about using ATR along with your stop loss to account for volatility? I'm just showing you why you would be wrong on that. Because the ATR is not going to show when that thing starts to pulse to the downside, right? If let's say you jump into that trade and you think it's only going to move 20 pips because the 20 pips is what their ATR was previously, and you close the trade for 20 pips and then watch it moves 150 pips more, because now the impulse will start, and the impulse was going to go very, 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 very fast. And your ATR is lagging by 9 days because you're only 1 day into the impulse. And the 2 day into the impulse, when they recalculate, it's going to give you 12 instead of 10. And then you recalculate 20 instead of 10. Your third day it recalculate, you're going to get 32 instead of the. By the time you get to 150, the impulse is gone. So you will not keep the trade so long as you should have kept the trade, because the ATR is lagging. It's calculating the last 10, and the last 10 of them were actually consolidating. US news on? Well, no, we wouldn't look at the news here, Michael. That's only for the trading room. We wouldn't look at the news here, right? The unemployment claim is out. Let's see. We can watch what it's reacting to. What is reacting to it? So let's go look at the euro and the dollar and everything there. What is the reaction? A reaction is downside. Nothing new here, right? I think go to the 1 hour, we can see reaction downside. Pung is going down as well, right? Pung is going down if any one of you looking for trades. The Aussie should be going down. Aussie is going down a little. New Zealand should be coming out. Yep, you got a bounce there. So those of you who took the trade in our trading room this morning, remember what to do, right? So those of you who took the earlier trade, you can move. You move your stops. You're pretty much okay with that. Let's see what the Pound Swiss is doing. Pound CAD is going down. Pound Swiss is going down a little. The Pound New Zealand is not going down so much, but it will go down. All right, these are trades we took in our trading room this morning. This one is going down nicely. So it's going to be a little slower. Remember we said that this morning? It's a little slower than usual, but it's going. So no need to worry about that. All right? So what you're going to do, if this one slows, is going to be something like this. You know what to do with it, right? You guys know what to do. You have rules. So let's leave the news alone for now, and let's go back to what we were doing. Let me go back to the Pung, and we'll go back to 8-hour moving averages. What's your view on measured move? AB is equal to CD? Not always, sometimes, but not always. How about, what is it? Do you think Great Britain has hit the bottom? It may be turning. It has an impulse to the upside on the 1 hour. We're waiting for flag. I'll go through the charts just now. How do you determine whether you're in a 3-wave or 5-wave consolidation? That is something for the trading, for the course, because it's a long story to explain that. It's not that easy. Many things I have to explain that you have to look at, and rules that you have to follow to understand that. When there are news events, should we move our stops to allow the market to fluctuate? Oh, no. You should do two things. You should get the hell out of the trade or move your stop to positive. So if the market fluctuates, it actually take you out. You don't want to do the opposite, Clarence. What you're doing is you're opening your risk. And I'm saying get rid of the risk in a volatile market. Right? What is the course? Okay, at the end of the webinar, if those who are interested in the course, stick around at the end of the webinar. I'll tell you guys. Here's the thing. I just explained, right? You don't want to open your risk bigger. You want to close risk when there's a possibility to do that. So if you're in a trade and you are, I don't know, 20 pips up, and the market is going to get volatile, you either do two things: close your 20 pips, or you move your stop to break even. Let the market take you out and say thank you for that, even if it goes in your direction. Because the next time it's not going to go in your direction, you have just increased your risk and you're going to lose much more. Remember, I think what most traders are trying to do is to protect the trade. You don't have to protect the trade you take. Don't get married to that trade. It's just a trade. It's going to win or lose. It's just a trade. You should never, I just explained in the first half, you should never care whether you win or lose a trade. It's the entire trading period, your year of trading period, or 6 months. That is what matters, not every individual trade. Just take the loss and let it go, or take the break even and let it go. Just move on. Take the next trade. Remember your strategy, the first half. Your strategy will show you that maybe you're going to get 10 losing trades. You don't cry over every one. You just keep doing the same thing over and over, right? Remember we showed you that? So you just keep trading. At the end of the 6 months period, you were supposed to be up in profit because your strategy that you tested were good, right? If the strategy was no good, trade through the window, stop trading and go find a better one, right? If you were trading pin bar, do like what the pin bar traders trade. Tell everybody, hey, that thing was not working good for me. I'll stop giving you guys signals and all of that stuff, right? Because the pin bar is not working good. That's it. Throw it through the window and go learn something. Come take my course. That is for the pin bar guy. Call me. Maybe I'll even give him a reduction in the course. Right? So you should not do that. Don't open the risk. Close risk. Risk is your problem in this business. Right? Don't open your risk. Never make your risk bigger than you've already calculated. If you're losing the trade, take the loss and walk away. One more small move up, possible. We'll go look at the charts right now then. So any more questions on money management, risk management? If you missed it, watch at the start of the webinar. We did money management first. Some people missed it. You can watch the webinar. You'll see that. Right? The second half of it was risk management. Moving average ATR, you know what to do with them. Don't use them. They're pretty much useless. Individually, they're pretty much useless. I think the only set of moving averages I use is this. This is a set of moving averages, by the way, right? It's a calculation of moving average. And the only reason I use that is because it shows us when the market is dying out, right? You can see that. Remember when you guys came in, I said, watch this, guys. Don't force yourself for the buy. Market is dying out. You're going to break down eventually. Monday, those who were here, remember that. You're interested in the sell, not the buy. So if you're not in the sell, you can get in the sell. It will make a bigger 60-minute flag, and then you can get in, right? So let's go look at charts now, and I'll take questions at the end if you guys are working up on some questions. I'll go pretty fast, so keep your questions. Dollar index. If you were here from Monday with me, you know it's going to go up rather than down. The downside we were not interested in. We're not interested in. We're looking for the upside. In terms of long-term trade, I like to see them break and then go for the trade to the upside, right? Long-term trade I'm looking at. And I still think we will make bigger sideways moves. So this may be one, we may go back and come down back. Long-term, right? Euro, pretty much the same thing. When it breaks here, you will have to wait for a flag to go in. It will make a flag if it's going to break. Is it a possibility to go back up one more? Possible. Don't take the trade. If this thing breaks here to go one more there, I'm not interested in that trade. I'm still interested in the trade to the downside, which would be something like this, and maybe go back up. This would be an amazing trade if they do that, right? But you can get some nice small trades in here. So let's see if it does that. Pound broke already, so if you're not in the trade, and I don't think you'll be in because this didn't give it a very nice entry. It didn't give us a nice entry at the top, so we will wait for a 1 hour flag and then we will take the trade. On the pound, we'll wait for a 1 hour flag and then take the trade. If we don't get a flag, then it could go back up. We're not interested. Aussie, we're already in this trade. Some of us from the top, some of us from the breakout. It doesn't matter. Some of us are in this trade. Remember, this is a consolidation, right? Remember, I warned you guys, it doesn't go very fast. We're anticipating a consolidation in here. I showed you guys, right? This is what we can expect. We might just get a break-even trade because this is what we expect. We're not expecting this thing to do that. I know some people post charts already expecting it to do that. But that's not what it should do based on what we're thinking. We're thinking this thing is going to go more like this and probably like this and then come here. This is the trade we don't want to miss. But while we're waiting for it, we may get some short-term trade. And if we're lucky, they go very fast and then come back and do this and go, right? If we're lucky, we get a deeper one like this. See this one here? We get a deeper one like this because we did sell that. We sold this one down here. We got taken out in the trade here. We sold this one here and we got that trade. We got taken out in that trade here. So we make profit here. We made some profit here. And then we decide we're going to see what the structure is and then we sell here, right? See, so same thing here. We're going to just watch how it behaves. If it makes a very sharp spike for the A wave, we're lucky, we get some nice trade. If not, we'll take the small trades off, right? We'll get some small trades in it. I'm not expecting very sharp moves down. We'll see that the punchy 15 minutes. We'll look at it. New Zealand, same thing. We're looking for trades. Some of our traders already in this, the more advanced traders, the guys who were with me for a while and they know how we do that. Now you can wait for this to break. They don't make a lot more than you, so don't worry very much. You can wait for this to break. It will make a flag. It will always make a flag somewhere here, and then you can get a trade. Only if there's a news event, then you will expect it to go, right? So remember what we were saying. We were here Monday, right? We were all here somewhere here Monday, and I said, I'm not interested in this. I'm not interested in that because I'm interested in the down move. See why I'm not interested in that? It's a waste of your time and my time. You wouldn't get anything in there except you'd lose a couple trades, right? All those spikes will come back, take you out, and then we'll probably go. So if this goes, we'll be looking for this structure here, right? Keep an eye on that. CAD, still a little too early. I do think CAD is going to go back up. That's my personal belief. Now, what the chart is showing me is that not so sure. So two things I'm looking for. Either I get a flag here now and I buy it. Either they make something like this and they do something like this and something like this, and then we will sell it. If we see a structure for a sell, you can be 100% sure we are going to be in that sell. We will be in that sell. There is no exception to selling the, there's nothing stopping us from selling the CAD. Absolutely nothing. Where it comes to selling CAD, I'm all in, right? When it comes to buying, I'm very careful with buying the CAD, although we think there could be one more move up. One more daily impulse up, right? You notice how this daily impulse went? Remember I told you guys, I don't know if it's you or in my trading room, watch this and they still go back up. Watch this and they could still go back up. They came down. I think I showed you this on Monday, right? So you can expect this to go back, come here, go back, come here, go back. Guess what? We'll be selling here, selling here, selling there. If I see this pattern, we're selling it every time. One of them will go. We will sell every one, take off let them take us off, move or stop, let them take us out. But one of them is going to go crazily down. And that one we will keep. Right? That is going to be the winner. That's going to be the 1,000 pip one. Right? Swiss, kind of going down. You may get a little more down. You may get a move up. I'm expecting some kind of a move up here before they come down. So we were looking mostly for a buy. Let's go into 1 hour. We're looking mostly for a buy setup, right? They keep coming back, but I don't think if they make one more drop, they'll probably do this again. Look, and then go back up. So there's no sense by selling this. It's useless selling it. Look for a buy setup. Yen, we are in the yen buys. Some of my traders got in. Some of us didn't get in. We're too slow. We didn't do the right thing. So those who are in, they're probably at break even. Those who are not in, I told you guys, watch this. It's going to go up. We would want to see them break here now. So if they don't break, they get a break even trade and you get one more impulse down, right? One more impulse down. But if they break out, then we keep the trade for the break of this stop here. Somewhere here, they could possibly go down one more. So if they break out, good trade. If they don't break out, you get a break even trade, right? We're gonna take it every time. We're gonna take the break even trade every time. And then see if they start to come down, you may get a short-term sell. You could look for a sell that will give you somewhere to this target here, right? There could be a nice sell there if they break. Euro Oz, let's look at this. Euro Oz is coming. We looked at this morning. Some of us close our trades. Remember, you're supposed to close your trades when this one come back here. And look for this. It still looks upside. So 2 things we're looking for here. I think you need to pay attention because this may give you a good trade. There's a likelihood we think this is going to break to the downside. If it breaks to the downside, there is a trade set up here for you. There's a trade that might come to retest this low. I am not very keen on that one. And the reason I'm not keen on it is I don't think it's going to be very long-lived. It can be very short-lived. But if they break this, if they stop here and go back up, I would take another trade here to retest this stop. And then I'll wait to see what happens because we have divergence. And if we have divergence and we continue to get divergence, they will come down back. So I would be careful of what happens at the top there, right? I do think it's going to go up. Everything looks upside and they're going very slow. I wish they've gone like this one. You see this one? 1, 2, 3, 4, 5, nice. This one is not going like that, but we'll see. If they go and they retest the low, we'll get one more here and then we'll get the upside. I don't know. You may want to consider it, right? You may want to consider that trade. I'm not sure. I'd like to consider it. So we'll see. We closed the long. We were in the long and we closed it. We closed it in our trading room for break even because once we saw this pattern here, we said, guys, when it come back to where we entered, take it off. And that was just before these 3 candles happened. That was when it was here. We had the red one, two more hours for them to take it off. They had 2 hours to make that decision to take it off. And they should have taken it off because this was a flag for the downside. As you see, I had it already drawn here, right? So we took off the trade and we are looking for downside now. We're not selling it. I'm not selling it, definitely. But if it breaks the trend line, I'll consider. It could go up back. Don't panic if you're still in the trade. Keep a stop here and don't take off the stop. And it could go back up. We can re-enter the trade right where we actually exit. But this time we will have more proof that it's going up. Right? You're in New Zealand. I hope this one is going to turn very soon. It's not turning as yet, which means they're breaking this low. How far low they can go? Not sure. We still have a lot of divergence here, right? A lot of divergence in the whole chart. I am looking for the long-term trade in this. I'm not interested in the downside because I want the long-term trade to the upside. When it breaks this structure, then I look for a short-term trade to the downside, and this seems to me a little dangerous. They don't go very fast. They don't go very smooth, right? This was a sell on that structure. You guys remember I posted a sell, and then it expanded the flag, and then it started to go. So right now, I don't see sell setups as yet in there. EuroCAD, look for a flag and sell it. There's no flag here as yet. They'll likely make a flag somewhere here. And then you can look for a sell to the downside. Euro yen, we are in this buy. Some of us are in this buy. I hope it goes for us. If it doesn't go, it may turn out to be a break-even trade, right? We bought it also in the breakout, right? That's an entry order trade, and we're seeing if this is going to go. If it doesn't go well, we either take the loss or we take a break even. We can take a break even now, right now, but we'll take, I still think it's going to go. It will have to break this structure before I decide to take off that trade. Right, I don't think they'll break here, but if they break there, then we would look for one more down here. I don't think they're going to break there because it looks like they're going to make, looks like they're going to climb up very slowly to this area here, very slow. More very slow climbing. It did not be amazing trade. It may be a breakout trade, and that's it. We're still in the structure, right? But that's, so remember what we said. The reason you want to take that is if they break out of here, you're good. If they're not breaking out of there, which means they're just, going here and doing this, you take off the trade because they're going to come back here, right? We'll get 1, 2, 3, and then we'd look for this trade here. Anywhere they break, we'd look for that trade to the downside. You're a chief. Amazing break. And we weren't trading this because we just hated what it was doing here, and now it take off. So you can probably get not the best trade, but it still has a trade here. If when it breaks, they make a flag, there's a trade to test this low. If you were with me from the starting, I expect them to break that low and then turn. When they break that low, we'll be looking for upside. So when they break this low, you can expect the chart to turn. That is how the structure should behave, right? So let's see. Turns out an amazing trade, right? We were ignoring this, and then it turns out very nice. Let's go. Europong. Europong did come down much more than I expect. So the question is it going right now? We were looking for this to give us one more up here and then go down. Now it's already going down. So is it a trade for us to get in right now? I think no. What we would wait for, you notice they always make a flag, right? They always make a flag. There's no question to that. Right? So if they make a flag here, and it will be a 4-hour flag, if we get a 4-hour flag, they'll be looking for this trade down to this level. This would be my good trade setup. That will give me good risk to reward. So unless and until they make that flag, I'm not going to trade it to the downside. So if it's crawl its way down, it's without me. And that's okay. I don't have to get all the trades. Pangos coming down, downside. Remember, we've been saying downside since Monday. They did crawl up some more, and they're finally giving you a good setup here for a trade. You got to be careful and hope you have a strategy and know how to trade that, know your risk, know everything. Pang New Zealand coming down. We're in this. Pang Chief. I told you guys, Pang New Zealand, you could have sold at the top, right? Remember, I told you the Pang New Zealand. If you know how to trade, you got a chance of taking it from this top or this top. You got it, same trade, right? We're looking for it to come back to this trend line and then probably lower. We'll see. If it goes too slow, we'll move it to break even and leave it, right? Pang Chief, we're in this one. Same thing here. It's going, they'll probably make a flag here now. That's okay. 15-minute flag. You can put the break even now and don't worry about it, right? If it goes back this high and take you out for break even, right? Then you look for another trade to the downside. That doesn't change the structure. You look for another trade to the downside, right? So, Pang Yen. Pang Yen, I think, is just a pullback. You're probably going to go more up. I'm looking for more upside in the Pang Yen. We do have some divergence, but this may just be a pullback to go up some more. Let me just put this here. This may be some kind of a pullback here and then probably go up more. So we'll see. I'm not looking for a sell in the Pang Yen as yet. Not as yet, put it that way. Pang CAD, you're getting a trade set up there and you can look for one more down. You have one here. You have one there. You're looking for one down. This would be your trade. Right? Remember the simple thing. Look for an impulse. Look for a correction. And look for another impulse. And all of you remember this, right? It's easy to remember. So let's go. Aussie Yen. Somebody asked me to look at Aussie Yen, right? Aussie Yen in details. Aussie Yen went back. You will have to be careful of Aussie Yen. Aussie Yen may break this top. Right? It could break that top and then go down. We're looking at a possible 1, 2, 3 wave before they come down. It's still a sell setup. Right? It's still in a sell setup. So watch Aussie Yen. Some of my traders in from the top. One of them is still in. I think the rest of them took it off when they started to go back up. So watch it. We're still expecting this thing to go down. CAD Yen. This one, it's probably going to first climb to the top here. You may get something like this. And then we could get one more down. Right? We got 1, we got 3, we got 5. Right? There's a possibility for that. New Zealand Yen. Same thing. This will break down. It did break the top. We weren't expecting them to do that. They break the top before we could get in the trade. And that changes everything. But still, if this starts to come down here, we're going to look for this to come back to this trend here, because you got to move up, you got to pull back, you got to move up, you're getting a pull back, you could probably get another move up, right? It's looking more downside right now, though. The whole structure in general is looking more downside. We'll see. We don't have a trade until they break. This is not one I'll take from the top. I'll wait for it to break. Susian, we stayed out of this. I told you guys to stay out of it, and it's a good thing. I don't like to trade this pair. This pair is miserable, right? It didn't break here, so you're looking for a sell. Now you'll have to look for a sell in the break of this, right? Still not the best idea. New Zealand CAD made some nice spikes, but it's still going down. Made a very sharp spike, took off some of my guys, and now it's going down. So it's still downside. It hasn't changed, right? We sold the breakout here. We sold this breakout here. See that? Went right into there, took off the guys, and now it's coming down back. Kind of wicked. Nifty in details. Let's go. Aussie CAD, we're looking for sell setup as well. You're getting a nice flag here, guys, so you may get a nice trade. It's going up a little more. Let it go a little more, and then you will get a very good flag here for a sell setup. Aussie, New Zealand. Yep, it's good. This, I don't think this is the start of the impulse to the upside, but let's see. Right, remember we're in this trade already from right or wrong here, and that's a long-term one. And we will. You guys should wait for the short-term trade, which is an impulse, a correction, and then we go for it, right? So you wait for that trade. If you wait for a trade, you get a better risk to reward. XAG, be careful of sells. Remember I said be careful of sells. There's a good chance that potentially this could go back up, which is why we'll be watching the Aussie trade we're into, because Aussie, you know, it's slow. It's going up and down, up and down. It's kind of consolidating, and it is in a corrective structure right now. Gold coming down. If you took the short-term trade, you really want to move your profit or your stops into profit. There's no guarantee that it's going to go all the way down. Right? There's no guarantee that this breakout here is going all the way down, right? If you're in the short term, which is the 15-minute and the 1-hour trade, what you need to do is move your stops into profit, because unless they make a flag here, that would confirm the downside. Oil, we still have some time. Oil, I still think is likely going to go downside, but structurally it's changing. Let me take this off so you can see what I'm looking at. So here is something. Tomorrow you will learn about structure. We'll do this in detail, so I'll tell you. So right now, I'll just give you very fast so we don't stuck too long on it. Right now, it's both ways. Right, it's a triangular pattern that goes both ways. So just bear in mind that if you're going to take a seller or buy, you're both ways as possible, right? You want to wait for break flag, and then go for the trade. UK oil, pretty much the same thing. It's in a sideways that could go up. Most likely it could come down back because we'll have a bigger, but it's looking more upside right now. Natural gas, for those who trade natural gas, upside. My guys are in the buy. You're doing wonderful. Right, watch it to break that top. Remember, you joined me Monday. I said watch it pull back and go break the top. So let's see, S&P 500 going up, right? I like the guys who are the fundamental people who are saying, oh, this thing is gonna dead, it's gonna go down, right? And by the way, it's not a triangle. Let me just give you this right away. For people who are teaching you structure or telling you about structure, this is not a triangle. That's not how a triangle look like, and triangles don't break to the downside. Two things you need to know about triangle. Triangle is a continuation pattern. If it comes to the downside, and let me go back to the oil and show you this triangle. This is what traders don't understand about patterns. If this thing breaks to the downside, it is a correction within this here. It's still a part of the correction to go back up like this, right? Bigger triangle patterns that are at the top of it, not this one on the S&P 500. You don't just put two lines and make an assumption it's a triangle and it's going to go down. Right? You don't do this and said we're in a triangle and it's going to break to the downside. That's not how it works. So if you did that, you're already wrong, and you probably sold in the wick and you lost the trade. This thing was giving us a lot of clues, and yesterday I said, watch it, the clues are changing for the upside. Right? First, we were thinking it's going to go down because we had this pattern in the making. And then we had this and they go back up and we said, okay, look for this pattern now. Structure changes. When the structure changes, we relook at the pattern. We look at what pattern we are seeing right now. And that pattern is the most prominent one. The pattern you're looking at now is the one you're going to make an assumption is going to go. And if that doesn't behave that way, it changes the structure internally, and it could change the structure internally. You learn to change it and go with the direction it's going, right? Nifty in details. It's going up in details. Let me see how fast I can give you, how much details I can give you, and how fast. We don't want to hold everybody up. Long term, I posted this a while back that this is long term. It's going to go up. I think it was from here. Yep, it was here, and I said, watch it. That move is going to climb up slowly but surely. It actually climbed, make a pullback, and it's still going, right? So long term, what you're looking at is you're looking at this. This is so easy, right? You're looking at 1, you're looking at 3, and you're looking at 5. So that's a long-term vision. The short-term vision in the daily, we've been tracking this on the daily for a while too. It broke out here. There were a number of small ones. Then they made this correction. Now they're going back up. So I think it's probably going to go up some more. On the 4 hour, you may get, when they pull to the top, they pull back, small pullbacks like this, small pullback this, and they go. Watch it. It's going up a lot. So you could get more upside in it. Copper, keep it here. We don't know. It's not going anywhere. So just leave it for now. When we see something, we'll let you know. I think that's about it. I went through all the charts, right? So you guys have an idea of what to look for in the charts. At least you have an idea. Now, if they work out well, Bitcoin, did I not look? Let's look at Bitcoin. Bitcoin broke this structure. Bitcoin, the long term, this is the long-term chart in Bitcoin, right? They made a move up, they came back, they made a move up. They didn't break the top. So I'm expecting long term, I'm expecting Bitcoin to actually come back down to somewhere here, right? Like a 1, 2, 3 wave structure. Short term daily, they did make a flag here. Let's see. They did make a structure here and they broke it. We can see that in the 4 hour. You'll see it much clearer. Yeah. They broke that structure. They did make a flag here. If you were in the sell, you should have taken that sell. If you take that sell, you want to put your stop here and wait to see what this does, because this looks like it could go back up here and retest the top. When you see that, you move to break even, you let it take you out, and then you look for the bigger sell structure, right? The bigger sell structure would be like this. If this one goes back to the top here, it looks like it's going to do that. You will pull this one and you'll wait for this to break. It will break. You'll get divergence here, and this will break to the downside. Right? It will go down. There's no question, because this is your impulse. This here is your sharp impulse, and this likely is going to be corrective. Can it climb up some more? I think yes, they can. And then we may get a 3-wave structure here to look at, something like this. Right? A wave up, a wave down, and a wave up, and then they come down. So if you're in the sell, take the break even and wait for another sell. You can take the buy if you get a buy setup too. Right? It looks more like a buy setup right now. We broke this, and you're looking for a buy to the upside, right? More like that. Right now, that's what this looks like a buy setup short term, but on the long term, it's going to go back down. That's about it. We've covered everything. Any questions? ExxonMobil and GR, that's the German turtle. We really wouldn't have time for so much of those. Maybe tomorrow we can look. Maybe tomorrow is Friday. We can spend more time on those and the DAX and all of them, because if we start doing all of that, we'll have too many. Right? We'll have too many, really, and we'll go on like forever. So tomorrow I'll try to add more. Tomorrow we'll spend a lot of time on charts afterwards, so you guys could prepare for the week, for the next week, right? For next week. So it will be good for tomorrow. You join me tomorrow. It's Friday. We're going to be more relaxed and more time to do it. If I read the book and there are parts I don't understand, can I still take the course? Sure, that is why you would take the course. There'll be a lot of things you wouldn't understand in the book. So what I'll do is I'll stop the recording for those who'll be watching it, so they don't have to do